Good morning, everybody. It's Friday, June 23rd, 5:29 a.m. Central Time. Sharply lower trade in the grain markets here this morning. Matt Bennett, thank you for joining us early on Friday. Mackenzie, why don't we start off with the overnight price action?
The December 2023 corn contract traded below $6 per bushel after peaking near $6.30 on Wednesday. The November 2023 soybean contract lost nearly 70 cents per bushel from Wednesday's high to the overnight low. Better rainfall chances paired with possible activity related to today's July option expiration may be responsible for the selling pressure.
All right, Matt, is the rally over?
Boy, I can tell you more on Monday. In
That's
all
a hell of a
honesty,
question to kick it off with, isn't it?
it is. In all honesty, sometimes in a bull market, you'll get a couple day pullback. It's the weekend. I'll tell you what, I don't want to be one of these weather guys. I know these guys have had a rough go this summer. But if the rain does not verify over the weekend, like some of them feel, in northern Iowa, you could get pretty good rainfall. Maybe northern Illinois even catches a little, but I don't know. Without knowing the weather, I have no idea whether it's over, but I can tell you the charts don't look good.
So you look at the chart, and I mean, so this is where we bottomed in May, and here's where we peaked just 2 days ago. To this point right now, this looks like a pullback. This doesn't look like total death yet. But if the forecast, which is a little bit wetter, and we're going to get to that next, if it confirms over the weekend, yeah, you could be sharply lower again come Sunday night into Monday. Absolutely. With that, why don't we just jump right to the weather, because that's what I think is doing this.
Definitely. A possible weather shift has helped to pressure corn and soybean futures here this morning. The Euro model in particular now offers much better rain chances for Iowa, Illinois, and Indiana. Better chances are also seen in eastern Nebraska, North Dakota, and South Dakota. The GFS is drier by comparison. The 6 to 10 and 8 to 14 day government maps favor odds of above normal rainfall for much of the Corn Belt.
Matt, this is a flip-flop in the narrative or situation when it comes to the models, because to this point, during the last, call it 3 weeks, the GFS has been wet and wrong in a lot of situations where the Euro has been dry and correct. And now you've got a flip-flop. Now the Euro's wet and the GFS is drier by comparison. I don't know if that's how traders are looking at it, in that, like, so the Euro's been right to this point and now the Euro's wet. It's a little bit of a shift.
It's a big time shift. You and I have actually talked about it more than once. That basically the GFS has been wet in the last month, while the Euro was drier, and it obviously seems like the Euro was the one that was correct. And so, I actually did a program yesterday afternoon with Eric Snodgrass, and we talked about a couple of these models. We talked about the whole weather situation, and essentially he told us, he said, you know what, I feel like there's like a 70% chance that we don't break out of this pattern to a degree that's going to be largely beneficial to the corn crop by the time pollination's over with. He's worried that we're going to stay dry, but he said you come into a weekend like this, storms are going to roll through. You've got the opportunity for rainfall. Does the system overperform or does it underperform? And that's the big question, because if it overperforms, then he said maybe you feel like you start to break down the blocking system that we basically put into place. And if you overperform, maybe you prime the pump. So I don't know. From my vantage point, if the Euro's looking wetter, I feel better about it. A lot of the maps have shown really Illinois coming in on the light end of things. But that particular map from the Euro makes me feel a little more confident we can finally catch rain. And let's face it, if we catch rain, especially where the black ground is, you're going to still have an awfully good crop in a lot of places. Just, I think some of this light ground's been hurt pretty bad already.
Okay, here's this latest Euro run, kind of zoomed in on Illinois and Iowa. And even if this thing is correct, the rains are still, I'll call them spotty for Illinois. There are places that could catch 1.5 inches of rain, but there are other places that may catch nothing if this is correct, which it is probably not to some degree. To some degree, this will be wrong. Iowa is where you're going to see potentially much better coverage. But even if this wetter Euro is correct, and this is a couple of different systems, like you've got one this weekend and then maybe some additional stuff next week. We don't know right now. And this is, like you said, I think come Sunday night into Monday, this would be a big deal. I was looking at some of the other stuff here, like your 7-day government map still doesn't look overly great to me, but those 6 to 10 day and 8 to 14 day maps look pretty good. Hey guys, remember Sunday night at 6 p.m. Central, We blast out our pre-open weather video. If you guys want to see that, we talk about markets, changes in the weather models over the weekend. Sign up for the premium deal today. What's up next?
So USDA released weekly drought monitor data yesterday. 55.7% of the contiguous U.S. is in some level of drought this week, compared to 54.5% last week and 62.5% last year. Drought conditions in the northern plains worsened with above normal temperatures, below average precipitation, and high winds. Western portions of the high plains region saw drought conditions improve with above normal rainfall. Drought conditions throughout the Corn Belt continue to intensify as a lack of precipitation persists, although Ohio did manage to receive heavy rains this week, with some areas receiving more than 2 inches of rainfall. So when we look at U.S. areas experiencing drought, 64% of corn country is dealing with some level of drought, soybeans 57%, winter wheat 50%, spring wheat 15%, and cattle country 41%.
So there was some, here's the week over week comparison. Definitely some improvement in Ohio, but not really much elsewhere. Maybe southern Minnesota saw some improvement. But Matt, this doesn't look good. Here's the 2012 comparison. We look, I would argue, substantially worse at this point in time than 2012 in terms of where the drought is, how far it's spread, and the intensity of this. I don't know if the 12 comparison is a big deal or not, but even if those rains in Illinois hit, I mean, from your perspective, from an agronomic standpoint, is that inch of rain next week, is that a drought busting event?
No, it's not. And here's why. We kind of came into this. Some areas of the state, I think, had more subsoil moisture than the others. But let's face it, we haven't had much rain for several weeks at this point. And so with that being the case, you don't really have any reserves. And so I think if you get an inch of rain, I mean, the humidity is so low. This corn plant's really wanting rain. It's wanting humidity. It's wanting dew in the morning. It's not receiving that. And so I think if you get an inch of rain, that saves you for maybe 3 or 4 days. But, whenever the corn is uptaking 2 to 3 tenths of essential rain or precipitation on a daily basis, especially if we get as warm as some of the forecasts have called for, an inch of rain is not a drought buster. What you need, especially on all types of ground, what you need is an inch of rain followed by another inch of rain the next maybe 4, 5, 6 days. But that 2-inch rain is what everyone's really looking for. But I'll tell you what, as hard as the ground is, we all need to hope that the first rain we get is maybe a softening type event, because I don't know what your experience is, Joe, but typically whenever we come out of a drought, it's just an absolute freaking crazy system, with high winds and derecho crap like that. And that's the last thing we need right now.
Okay, so when people watching this video or listening on the podcast, they're gonna listen to that first portion where we talked about the Euro model and the possibility for an inch of rain, and they're gonna say, "You guys are idiots. That's not a drought busting event. That's not going to do it." And I don't think that's what we're saying. We're saying that maybe that's why the market's down today, because we've got some better rain chances. But I think in regard to like a crop saving or drought busting event, yeah, you need an inch followed by another inch followed by another inch. You need a shift toward a wetter pattern. You need to shift out of this drought pattern. So nobody here is telling you guys that the crop is saved by any means. We're just saying that, hey, there's a possibility that things could improve, right?
Oh, absolutely. And I mean, in the highly scientific words of my father, around July the 4th, he says we typically see some sort of a weather pattern change. And it is something that we've seen a lot in the past. And typically the markets, have seen that typical shift as well. Of course, you're coming up on pollination. But Joe, I'll tell you what, if we don't get decent rain, and I'm saying if you go into pollination dry, it's a bad situation because we're so dry. This the crazy thing about it is this is good for us. We were at a ball game for my son last night, and it was in the mid to high 80s going into the game, and it felt great. Why? Because the humidity was low, and a couple people said it's like being in Arizona. I mean, it feels good for us, but it's not what the corn crop needs. And so we need a shift, and we need it in short order, because there's a lot of tassels going to be shooting in the state of Illinois, especially in my part of the world, in the next week. And so pollination is right on the back doors of that. So we need this to happen in short order.
Yeah, for sure. All right, let's jump to some demand stuff.
U.S. ethanol production increased moderately week over week. Weekly output of 1.05 million barrels per day was up 3.3% compared to the previous week and down marginally versus the same week last year. Ethanol stocks were pegged at 22.804 million barrels. The print was up 2.6% on the week, but down 1.7% compared to the same week last year. Implied gasoline demand was up 2% compared to last week and up 3.1% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 2.3% versus the same period last year.
All right, we're in a crop scare market, so nobody cares about demand. That being said, we're not going to hit USDA's target for corn demand via ethanol in the old crop marketing year, unless we're like off the charts here the next 2 months. Do you think the ethanol producer is getting his hands on more corn right now, Matt?
Yeah, it sure seems like it, but a lot of folks would say, "Good Lord, after a couple weeks of a big rally, it's surprising that they're running like that." But these guys are pretty good risk managers, and a lot of the corn that they're boiling through this last week or two was bought a long time ago. And bottom line is the margins have been good enough, especially whenever you get into areas that the basis wasn't racing. If we all paid attention, though, basis has really plummeted over the last couple of weeks in many areas, and I do think that is going to help your profit margins as well. So I'm with you. You're not going to probably hit that, but it sure is nice to see 105. Gasoline usage is going to do nothing but get better over the next few weeks because people are going to be driving, going on vacation, doing stuff like that. So it's been nice to see that stocks haven't surged. I mean, actually, stocks are a pretty reasonable level.
I'm not an expert on statistics, but we've got some very strong odds here.
So Ukraine is 99.9% certain,
Of course they are.
yes, they sure are, that Russia will exit the Black Sea grain deal in July because it no longer needs Ukrainian ports to export ammonia. The Black Sea grain deal allows for the safe export of ammonia, but none has actually been shipped under the agreement. If Russia does quit the deal, Ukraine has a $547 million fund set aside for businesses whose ships could use Ukrainian Black Sea ports under a new agreement. Ukraine also has the option to export grain via its small Danube river ports and through its western border with the European Union.
Nobody cares about this, but you've got to pay attention to it because, I don't know, if the war escalates, I still think there's a chance that something could happen with Russian wheat. Matt, do you read anything into this anymore whatsoever at all?
I several times on your show, I've been, I don't know, pretty sarcastic about how I feel with the Black Sea stuff, and I guess I still feel similar. But I'm with you. You can't ignore it in whole. I mean, obviously, Russia, huge exporter of wheat, basically commanding most of the percentage there over the past many years. And so, what are you going to do? I mean, here's the thing. I think some of the headlines are tradable deals for people, but they've lost their luster. But at the same time, I'm with you. I'm not going to totally ignore it because bottom line is, if they completely shut this thing down, it's going to make in my opinion, a pretty big impact.
Okay, here's my take. Ukraine does not matter. Ukraine is projected to account for, in the new crop marketing year, less than 5% of all global wheat exports. It's 9.6% of global corn exports is the projection. And I've made the argument in the past that this is a bigger deal for corn, although I don't think anybody else feels that way. U.S. HRW wheat is priced at a 35% premium to Russian wheat. So Russia is going to account for, according to USDA, 22% of all global wheat exports. That's the deal. If you were to ever see some sort of disruption to Russian wheat exports as a result of all of this, that's where your big implication is. I just don't think Ukraine's enough to move the needle here. Hey, we've got some acreage estimates from our friends here, Matt.
Yeah, so Matt and the rest of the gang at agmarket.net released acreage estimates ahead of next week's USDA planted acreage report. So the group believes late planting, particularly in the northern plains, may have caused some acres to be switched from corn to soybeans, resulting in a slight increase in soybean acres from the USDA's March projections. Despite this, agmarket.net believes prevent plant will be low and double crop soybean acres may be strong. The group's June planted acreage estimates are as follows: 91.85 million corn acres, 87.65 million soybean acres, and 50.07 million wheat acres in June.
Matt, people are going to say your corn acreage number is too high. Explain yourself, please.
Yeah, I mean, here's the thing. I feel like the weather overall was in pretty, I don't know, was pretty cooperative, other than whenever you get into, for instance, North Dakota. Now, the thing is, we feel like the USDA felt whenever these March planting intentions numbers came out that acreage would be robust. I got to think that obviously decent prices still, first of all, and second of all, Mother Nature cooperating is going to lead to prevent plant being pretty low. But I'm not quite as high as the USDA. We talked to basically every producer that deals with agmarket.net, and you're talking over a couple thousand growers, and so we have a pretty decent expanse there. And I think our feel was that the only acreage switching that we saw was going to be in North Dakota, and some of those acres moved over to soybeans. It could even be more than what we thought, but I still feel like that corn number is going to be pretty strong. I don't think it's going to be over 92, but as you know, we've come into this June report before and been surprised. I guess nothing would surprise me greatly, but at the same time, I think the main name of the game is that acreage is going to be pretty strong this year with low prevent plant.
Just about every acreage report has some sort of surprise. It's the hardest report to predict in my view. Like a lot of the demand stuff, you can generally get a feel for. The yield thing is always kind of a toss up, but you can generally gauge the direction. Acreage is like the biggest thing in my view that is unpredictable when it comes to the USDA stuff. So we'll see what happens. That's a big report next Friday, guys. July grain options expire today. Matt, how much of the volatility here late this week has to do with option expiration, you think?
I've got to think that there's a fair amount.
Yeah.
If you see a bunch of puts or calls at a certain strike price, you can believe that they're going to go for that. Some of your trend following traders and funds and whatnot. But yeah, I think that it's probably got a lot to do with it. Again, Joe, Monday's a huge freaking deal. Sunday night, the direction of what we're going to see coming forward, a lot of that's going to be known in the next 72 hours.
All right, cattle market was higher yesterday.
It sure was. Live cattle futures closed an average of 124 higher. Feeder cattle futures closed an average of 307 higher. Choice box beef ended the day at 334.47, up 22 cents. Select ended the day at 303.80. That was down 45 cents. Keep in mind, we do have a cattle on feed report coming out today.
What's the report going to say?
So analysts, this is what analysts are saying. They're expecting the on-feed number to be right around 96.8% of last year. Placements 101.7% and marketing 101.6%.
Matthew, we've got a correction in the cattle market. We were up yesterday, but is it over or is this a bump in the bull market road here?
I don't believe it's over. I really don't. It's hard for me to believe that it's over, especially, if you turn around and you have a corn crop here and you heal up the Western Corn Belt. I mean, again, I've said this before. I do not think that you top this market out until you see retention of heifers keep you on the cattle on feed path of these lower numbers. Because if that happens, I just think some people are going to sit here and say, son of a gun, now we're going to run this thing. And we will. It's a futures market, though, and we're all going to try to outguess it. We know that. But I don't think the market's over.
In terms of pasture healing, if you guys heard some background noise this morning, Mackenzie, it's like pissing down rain at your house in Nebraska.
Yeah, it started pouring here about 20 minutes ago. So
why don't you send some of that my way?
You got to come to God's country. This is where it's at.
Here we go.
Outside markets this morning, guys. U.S. dollar is actually sharply higher. Stocks are off. S&P's down 24. Dow Jones down 115. Bonds up a little bit. Precious metals mixed. Crude oil's down 93 cents in the August WTI at 68.57. Have a great weekend, guys. We'll talk to you Monday.
Yep, same to you.